Charlotte McLeod with the Investing News Network, and here today with me at VRIC is Mercenary Geologist Mickey Fulp. Thank you for joining me today.
Thanks, Charlotte. Always my pleasure.
Okay, so recently in your work, you've been focusing on the seasonality of the gold price.
Yes.
Can you briefly explain that concept for me?
Well, we've produced over the course of 2 or 3 months 4 treatises on how gold moves in the seasons, and we really focused initially on shorter term phenomena and then expanded that to a 20-year record for gold. The idea is that there's a seasonality in the gold price that speculators, traders, and even hoarders of gold can take advantage of. And what we found is from a June 1 high, then you have a summer doldrum low, which starts to recover post Labor Day, goes up through October, and that makes sense with the Indian wedding and festival seasons. Kind of goes flat for a while and then rises toward Christmas as the so-called love trade comes in the West, where every guy is buying his wife, his girlfriend, and or his mistress a bauble of gold, and then kind of drops off at the end of the year, and then we have this big January rise as bullish feeling comes in the new year.
Okay, and this is all happening no matter if it's a bull market or a bear market.
Yeah, so the last one was the 20-year record, and we combined 20 years in segments. So from June 1 through Halloween, from November 1 to January 31, and then we looked at the big picture from June 1 to January 31 in all markets, and then we separated those into bull markets and bear market years, and we see basically the same patterns with some divergence, but the complete pattern holds in bull or bear markets.
Okay, so if you're an investor, how can you use this information to your benefit?
Well, I would say that it's very difficult to invest in gold because it doesn't always provide a constant return. That's what an investment is designed to do.
Right.
So you have the speculators in gold, the traders in gold, and then people like me who hoard gold. So if you're a trader or a speculator in gold, you should buy it sometime in July, early July to mid-August, and be prepared to sell your gold in mid to late January. And if you've done that you'll 6% return on that over a 20-year period. If you're a hoarder like me, you just buy in the summer and sit on your gold.
Okay. Now, other than seasonality, there are definitely other factors impacting the gold price. Right now, I hear a lot about the US dollar. But what do you think is the most important factor to be watching in regards to gold?
US dollar.
Okay.
So this started out, our treatises on gold started out with doing correlation coefficients on gold. And there is a strong negative correlation with dollar rises, extremely high. The latest one being somewhere around 0.92, negative 0.92, which is almost a perfect correlation. So as the US dollar rises and falls, gold's been going up and down almost with perfect negative correlation. There are other factors that commonly either cause rises or falls in gold price. Geopolitical events, we're finding that has a lesser impact now, and safe haven insurance policy sort of buying, which is kind of what I do too. But that right now it appears that the world looks at the U.S. dollar as more of a safe haven than it does gold, and that's somewhat unusual.
Okay. So in closing, we're here at VRIC and people are here to hear what experts think. What are you looking at right now? What are you bullish on and focused on?
Well, I've been writing lately on two subjects, on gold, and we really discussed that. The first one this year or last year was entitled "Why Gold Ain't Going Anywhere Anytime Soon." So I think gold is fairly valued right now. But what I'm looking at is uranium and the changing world of uranium worldwide. We're still building 66 new reactors under construction, 158 in the planning, financing, pouring concrete, initial footing sort of stage. So really looking at uranium kind of to lead us out of this quandary of a very deep bear market for commodities.
Okay, so it sounds like lots of new sources of demand coming for uranium.
Now, uranium's coming on, when it's going to happen, when we're going to end up with shortages, it's a bit of an equivocal analysis. We see everything from 2017 to 2021 by other analysts, and sometime in the midterm and with a long-term view, uranium's got to increase.
Okay, well, thank you so much for joining me today.
Thanks, Charlotte, as always.
And once again, I'm Charlotte McLeod with the Investing News Network, and this is Mickey Fulp.